Hey, what's up, everybody? It's your boy CryptoSpyder. I took an ETH trade earlier today, and I wanted to kind of give a top-down analysis for y'all so y'all can see what I saw to take this trade. So right now I'm looking at the weekly candles. So each one of these is a week. You see the high point here is May, the 10th of May, runs all the way up to 43.75 or 80, somewhere in there. And then you start to see this one week where it just drops all the way back down to into that 17 range, comes a little lower there. But when I start looking at this, I start looking at my order blocks, which is what I kind of go by to see where price may change or reverse or things like that. So when I'm looking at this, I'm looking this run up and then run back down. And I'm like, okay, you've actually got an order block here, this black candle with this wick, and you'll see price ran up and then retested into this. So let me use a rectangle and mark this up, and you'll kind of see where price retested before it ran, right? So then as price came up, this almost was a bearish order block, except for this wick didn't quite break this wick. So I wouldn't really count that. And then you got this 2 candle pullback here, and then price leaves. All right. You see when price leaves from this wick here to this wick here, there's a little bit of missing price in there. And again, the market works on an algorithm. It likes to fill in missing price. So since this is a bearish order block here, we're going to mark up the last down candle before, and you'll see exactly what happens. This runs all the way up to its high, and where does it tank to? To fill in missing price between here and here. It drops all the way down, touches, comes back up in the same week, runs up a few $100s, and then starts to go again. Where does it come? Retest, and then boom to where we are now. Okay, what you'll also notice is that you've got missing price from this wick to this wick. All of this in here is missing price. So this has to be filled in at some point, or at least very close. So if you were to drop an order block from here to your high, that's a pretty big order block, you'll see that we're almost there. Now, this is still a few hundred pips or so or more on ETH, but it almost filled in this missing price. So it's coming back into this order block now. So once I saw that, I wanted to come in here and look at lower time frames to see what's actually going on in these lower time frames, to see if there's possibly a sell to take or somewhere in here that might be testing back down. It may come back to here. It may come back into an order block, a smaller order block that's in the middle here. So you just kind of got to break down the lower times to see. But you'll see where price was and where it's retested a few times. And every time it tests this order block, it runs. So, and usually the second or third test is the most powerful. So you'll see on the third test of this order block is where it really started to run for the last month, except for this week where it's down a little bit in this candle. Something else I wanted to mention. I know when y'all look at my charts, it may look weird. Y'all are used to green and red. The reason I don't use green and red is because of psychological reasons, actually. For a lot of people, green means go and red means stop, or green means good and red means bad, or something of those lines. So if you're looking at red and green, the colors will sometimes mess you up. So it's better to use neutral colors that don't give you any signals of good or bad or stop or go or anything like that, because those things can kind of throw your mind off too. That may not matter for some people, but I personally love the gray and black candles. Gray means it's going up, black means it's going down. These just kind of take that red and green kind of psychological aspect out of it. So that's just a side note, but that's why my candles look this way. I changed the color of them on purpose. So anyway, so once you look at this weekly, you can break it down into the 1-day candles. So as you back out, you can see here's your candles here. This would actually be one of the order blocks you could possibly take here that you can mark up down here would be this one here, which you'll see price didn't quite come there, but it did on these two. It perfectly touched before it ran on the daily on this order block. And then here you've got this missing price, which is basically what this is trying to come in and refill. So then it runs up to the high, and then it starts back down, test off that a little bit, and it starts to run back up. So your daily is getting close to these blocks here, and there's a good chance it's going to keep going up. And with all the adoption happening in crypto right now, we expect price to continue up. So once you kind of see your daily zones there, and you kind of know what's going on. Now, another thing to look at is When you look at this high, now before on the weekly, you had all that missing price in there. When you break it down to the daily, you'll see that these wicks and candles filled in all this missing price. But where do we have missing price now? From here to here. So you've got all this missing price that needs to be filled in. So this bearish order block here is where you could mark another zone. Let's go over and look at it. Where are we at? Where did it retest? Where is it come bouncing off of? That daily order block from here, which is where it had to fill in missing price. So it fell, came all the way down, tested, and then where are we at now? We filled in missing price. We're testing off this order block. And this is where you're seeing the reversals off of. It came up, broke down, and it's running back up again. Okay, these are daily candles. So let's go in and look at the 8 hour. So you got this is the 8 hour structure, same thing, breaks down, comes back up, and now you got these 8 hour order blocks up here. Okay, so once it kind of runs up and you see that it's testing off of it, you can come in and put in, you'll have a bearish order block here. All right, so that gives you the bearish order block there. So you'll see it comes up, retest, and then comes back down. Now, this does break a little above this order block. So a lot of times what that means is that there was a lot of buy orders in here. People thought that this may test and run down, and the banks basically push price up, because if anybody's got a buy order in here, more than likely they're putting their stop loss right above this order block. So this wick would take them out, stop loss, and then it would tank again. So you see this higher wick, that basically means that the bank just knocked everybody, or the institutional money just knocked everybody out of the trade, and then they're going to take their profits as it comes back down. So you do have to be careful of these little push-ups, and sometimes you have to kind of give yourself a little bit of extra stop loss in case it does run up. So anyway, so now you've got these zones set to where you kind of see bottom and top. Okay, you see these order blocks up here and where it's coming back to. All right, so now let's break it down into the 4 hour. Okay, so now here is your 4 hour order block. Okay, so you got your 4 hour order block. Where is it retesting to? Perfectly into that 4 hour order block before it drops. Okay, so now we can come down to the 2 hour, the 1 hour, whatever, and just kind of take a look. All right, so we see that here's a 1 hour order block. If we were to refine this down to that 1 hour order block, then where are we? Testing perfectly back into the zone. Now, refining your order blocks in smaller time frames helps you get better entries, and I'll show you what I mean in a little bit. You can get it to where your stop losses is minimal, because you're breaking down those time frames and you're seeing where the smaller order blocks are, and it gives you a more pinpoint accurate entry into that. Okay, so that's the 1 hour. So from here you can go to the 30-minute, 15-minute, kind of whatever you feel comfortable with. Okay, so here you go. It comes in the 15-minute, almost touches here, comes in, big wick here as it pushes off. Now you see it comes up and then a big fall again, pushes up, wicks, and then it drops big. Okay, and then you start making these other smaller order blocks here. So you've got an order block here, which you see it retest back into. Okay, and then it falls. Now, as it falls, it breaks these lower structures. So it kind of gives you the idea of, hey, this may come back down even further. But then you can kind of refine it down to where, you may see some other order blocks. So you've got one here, it doesn't quite come down to it. So you could potentially say, okay, where's your next order block that it could retest off of? And that would be this one. Where does it test from? Perfectly. Boom, off the order block, and it's gone. Okay, so from this point you can break it down to the 5-minute, and you can just kind of see how things are looking from that time zone, or time frame, see if you can get any more precise look on what's going on. So you've got a lower order block here, which it didn't test down to. You've got a bullish, bearish, bullish order block here. So it looks like this is the order block that it's testing off of. Okay, so when you come back, so there it is. That's where it bounced off of. That That's a 5-minute order block. Okay. So you're just kind of breaking down these smaller time zones to see exactly where price may come back to see if there's a possible rejection. Now, this could have blown through this order block and come back down to here. It could have come back down to here. So there is a potential, if you were to take a trade off of this per se, that it could blow through it. But when you get into these smaller order blocks, let's say, you wanted to take a trade somewhere in here, well, your stop loss is going to be just a little below this box. So it's not that big of a stop loss, really. And of course, you'd want to do your risk management with your lot size, depending on the stop loss and all that stuff, to make sure you're not over leveraging your account. But basically, you've got this zone that you know that price may test off of. Okay. And that can kind of give you an idea of where it may. Now, if you risk, let's say 1% of your account on a trade and it blows through, you've lost 1%. But then you know that there's a good chance it could reverse at this order block. And if for some reason it blows through that one, you've lost 2%. That sucks, I know. But then you've got your last resort kind of here as your lowest point, which more likely we would test off of. And if it did test there and you took a trade, your risk to reward on that, your profit is going to make up for those 1% losses that you took. So anyway, it's just another way to look at it. So when you get to this point on the 5-minute, what you notice, hold on, let me go back to the 15. I've mentioned it before. So from here to here was missing price. So as this, and all this got filled in, price came back and tested, you got all these wicks. And so there's really no missing price in here. This wick came up to meet this wick, no missing price there. But from here all the way to here, there's missing price. So you're pretty sure that whenever it does start to reject, it's at least going to come back in and fill in this order block. Okay, so let's just put, and if you wanted to mark up just the order block, you would do it from there, from the actual body to the top of the wick. But sometimes it's helpful to go ahead and fill in that wick too, because that will give you kind of where missing price may come back to. Okay, so if missing price from the bottom of this wick, I get it just right, bottom of this wick to the top of this wick, it's at least going to test back up pretty close to this wick here. Let me get in a little closer so you can see. So at least going to test back up somewhere into this wick, but before it rejects or whatever. And you look at what happened. It got up into that area and it's rejected on the 15-minute. All right. So then we would come back down to the 5-minute, and you'd kind of see what happened here. And then you can even go down to the 3-minute, 1 minute, and just gives you more information on what's going on. Now, you got a bullish order block here, bullish order block here, bullish order block there. And so it kind of tells you like it's stacking. It's going up and it's coming back into an order block and running. It's coming back into an order block, which fills in this wick here, fills in missing price with this one. That perfect, almost perfect algorithm. Runs up, comes back, basically perfect wick to wick. I mean, you look at this. I mean, it's incredible when you watch how this works. From the top of this black candle to the bottom of this gray candle, almost freaking perfect, to almost a pip of how it moves sometimes. So you get this bearish candle here, this bullish order block here, runs up, comes back down into that order block, fills in missing price, because missing price is from here to here. All this whole candle here is missing price just about. Okay, so it's probably going to come back, comes back, test it almost perfectly, and then runs again. Now, what happens when we get up into this order block here? Okay, I've got there's a replay feature on TradingView. It's this arrow right here. It brings up this little box. I'll kind of show you. Sorry, this chart actually is back at like 5 o'clock this afternoon. There's a bunch more candles over here, but you can hit this little button here, jump to, and you can click on any candle, and it'll actually, like, I can come back to this candle here and hit it, and it'll erase everything to that point. Now, this is great for back testing. If you want to just test a trade strategy to see how things move, you can go way back here on somewhere on a chart, on a 1 hour, whatever you want, erase it, and then you can come in and kind of go back to where it's erased to. Let me get back to my spot here, sorry. And then as you can hit play, and you can adjust the speed, but you can hit play and it'll, every few seconds, it'll produce a candle for you. Or you can just hit this button and you can kind of see how things go. It'll just show you the candle, show you the candle, show you the candles. So as you watch this, here it comes, it tests up into there. Okay. Now, this is not an indicator of taking a trade immediately. These order blocks are just one way of looking at the market. You need other confluences. You need something else to show you that price is about to reject or price is about to do something. So I wouldn't just take this trade just because it came into the order block. What I'm looking for now is for price to reject off this order block, run down past some of these other order blocks that it's already been made over here, because basically that shows you that what we call a microstructure break. So as the candles start running down and it starts breaking these candles or these wicks, it shows you that there's a lot of seller pressure and that it's breaking the previous wicks to push itself back down. So as you continue to go, you'll notice it pushes up a little bit, but then what happens? It starts to drop. With this wick here, it broke this candle, and this candle. So it broke 3 candles with this wick. So it's showing you a little bit of seller pressure here that it could push lower. So you keep going. And again, I'm not in this trade yet. I didn't take this trade yet. Now you got this big candle here that drops down. Okay. Now that kind of lets you know a lot of seller pressure. Sellers are coming in. They're selling here and everything's starting to push down. But what are we looking for? We're looking for the retest back to the order block, because you've got a lot of missing price here. From this wick to this wick is missing price. So you can mark up your order block if you'd like to from here to here, or you can put the order block, if you want to, order block down to the missing price just to see how far it'll come. So let's just put it there to see. Okay, so this plays around, comes down, breaks, and then more than likely the reason this wick dropped so far is because you probably had some buy orders in here at this bullish order block, and so it wanted to take all those out, take your money. Now remember, banks can actually see the order books. They can actually tell if there's 100,000 people that take a buy order here and there's $10 million sitting there in orders. They can see that. They're going to try to manipulate the market to take that money, because they need large amounts of orders, because they don't trade like us. They don't trade $100 at a time or $500 at a time. They trade millions or billions at a time. So every time I take a trade, a buy, for example, there has to be another order on the other side of the market as a sell to counteract mine. Banks can't just put $1 billion in there and there's somebody else out there with $1 billion that's going to match it. They have to wait till a bunch of us come in and put orders in that is equivalent to the amount of money they want to spend, 10 million, 100 million, whatever, billion, whatever it is. And then they purposefully put in sells up here with their money. They will put in sells, push it all the way down on purpose just to take out this liquidity that's sitting here. And then they will let it run back up. And when it gets back up here, they'll take out their sells, or what, they'll break even, but they took your money here. They'll even take buys here to push it back up. So they will put in their own money up and down to manipulate these markets to make sure that they can take your money. So this strategy is basically trying to teach you how they move so that you can ride their coattail instead of being taken out by them. Instead of, you hitting your stop loss, you're getting your entry at their stop loss. Like when you're getting in with them. So when everybody else is getting knocked out, that's when you're kind of getting in. So you're trying to find that entry that the banks are about to take so that you don't get screwed by them. You're using their strategy with them. So you'll notice this starts to come back up. Okay. Breaks back into that zone there, but then it continues back up. Let me back up a second. I think this is where I took my trade. Yeah. So when this price comes back in to when I saw it come back up to fill in missing price here, this is where I took my trade because it's working the algorithm. Okay. It came down, came back up into this zone, and now it's wicked off here. So when it came here, it pushed down. You could have took an entry there, but I ended up waiting a little while to see what was going to happen, and it did push back up into here, and this is where I took my trade off this order block. And as you see, these are, well, let me back up a second. I knew it was looking weird to me and I couldn't figure out why. I was looking at the 3-minute. When I took my trade, I was actually working the 1-minute. So I apologize for that. Let me get back to where I was. So, okay. All right. So I saw this push up. Okay. It tested here and broke, tested here, came back down. So I waited for price. And with the 1 minute, sometimes there's gaps. So it looks weird, especially with crypto, because price can jump so much. And there'd be a gap between, because this is actually a candle, even though it doesn't look like it. It's basically just a flat candle, no wicks. So price, in this 1 minute, it jumped from here to here and stuck there. So it's kind of weird. Sometimes when you break it down, the 1 minute candle, price is moving fast. So, but what you'll see is this is your 1 minute order block, basically. Okay, where does price come? Right back into that order block. And then what happens? It falls. Okay. And it drops. And then it dropped. And then it dropped. All right. Now, I wanted to show you also. See, where was it? Sorry, guys. Trying to find the perfect example to let you see. So you've got an order block here, a bullish order block. You've got another one basically kind of down here. And you've got another one down here. So you can kind of see, okay, if you wanted to take a trade here, if you wanted to take a quick scalp, your take profit 1 would be at this order block. Okay. Take profit 2 would be somewhere down here. Take profit 3 would be somewhere down here. So you can look back at previous order blocks to say, okay, you've got missing price in here, missing price in here. There's a good chance this trade could continue down, past this order block and down to this order block, or even down to this order block before price rejects again. Okay, actually that was missing price. Sorry. So you can kind of look at these zones and say there's a good chance that price could come back to these, but it could bounce off of any one of them. So you got to this point, started to consolidate a little bit, and then you see boom, big candle. And I want to say this was an order block too here, but anyway, so and then it dropped. Okay, and it broke. So if you've got buyers here, this just took all their stop loss. This just hit their stop loss. Okay, so they're out here taking money from people. So then you start to see, okay, it's pushing back up, pushing back up, pushing back up, and I'm still in this trade. Of course, me naturally being human, I get a little nervous at this point. I'm like, uh-oh, all my profits leaving. I'm like losing everything I just made. But what happens? You get to missing price. You get to your order block here. And basically it comes almost back to it. And then what happens? Drop. It'll test back up into that order block and then boom, gone again. Okay. And it may work up a little bit. But at this point, the markets basically has shown you that we're bearish. It is reacted off of these zones. It's reacted off of this, dropped here, it reacted off of that order block again, and it just keeps dropping. Okay. So I think it was somewhere in here where I actually did pull profit. Just because and then of course, after I pulled profit, it did this. So I didn't get as much as I could have, but you start to see how the market moves. All these order blocks just give you an idea where an order block basically tells you where money came into the market, where somebody may have put their orders in, or where you had bank institutional money. So it just gives you an idea of where things can reverse, where entries can be, things like that. So, and you see it finally broke this order block, and then it ran back up and then came back up to here and then dropped again. So, and you see it's coming back into this order block now and drop it. So you see how the market, you got a high and then a high and then a high and then a high and a high. And if you were to take your trend line or something like that, you could basically, take a trend line and run a trend line down here, and you could see how this market is testing off of it. Okay. Coming back to the trend line, back to the trend line, back to the trend line, and it's just dropping each time. Now, eventually it's going to break that trend line. That's just how the market moves. But even there, perfectly to that, and then dropped again. So if, for example, if you missed an entry here, but there's an order block here, you could actually wait until price dropped and came back up and take it here. Now, the only problem with that is you would almost want to put your stop loss back up here. So your stop loss would be a little bit higher. If you got in here, if you got in at the top up here, you could basically put your stop loss right up here, which is not much. So if normally on a, let's say an ETH trade, normally you'd take a lot size of a 0.01 or something small, you know, well, if you get a tight stop loss, like you know it's going to reject here, you could possibly put in a 0.03, 0.04, which if you lost, yeah, you know, maybe 1 or 2% of your account. But if you were trading off the 1 hour, your stop loss would be a few hundred pips. But if you're trading off, let's say the, you know, off of the 5 minute or the 1 minute, your stop loss is going to be really small. I mean, comparably speaking. You know, if you did a ruler from there to there, what is that? It's 142 pips. So, and that sounds like a lot, but in crypto, things move a little differently than Forex. So, I mean, the pips and things like that or whatever is a little different. But, you know, if you were taking on a 1 hour, that could be a few hundred pips as opposed to that, you know, the 140 or whatever it was. But, you know, if you missed a trade set up here, you almost know it's going to test. Now, it doesn't always. Sometimes this may break back up to here and then drop. Sometimes it may just blow right through all of them. You know, I mean, even the best traders in the world lose trades because the market sometimes, you know, it sometimes moves like you don't want it to. But for the most part, I mean, you can see these order blocks. You can see where price is going to retest to, and you can watch these zones, and you can just kind of keep seeing what happened. So you did get a little break of the trend line there. And see, it finally did break the trend line, and it, you know, it actually broke it. So now you see that we're working back up to it. Move this, but you see what happened. This is an order block from the past, and what happened there? Price dropped. Now it could work back up and blow through it, but I haven't looked at all this honestly, so I don't know what price is about to do from here. But you see, it came back to this order block again, and then boom, right back down. So it's incredible to watch exactly, and it's still going. I guess that's all of it. So, you know, it came back down into, you know, just a little beyond one of these. And I imagine what it must be is there must be an order block here that I didn't mark up. This must be one of the order blocks, because when you come back and look at it, where is it testing? I'm telling you guys, you can't make this shit up. The market is so, it's not 100% predictable, but you can almost tell where price is going to go. I'm not great yet. I'm not perfect. I'm still learning, but I surprise myself sometimes where I can be like, oh, it's going to retest right there. Watch, it's going to bounce or it's going to turn or something. And I just watch it happen in real time. You know, and it's really, really, really cool. So this stuff takes a while to learn. I've been working on, like, I've been trading since January, but I've been learning order blocks specifically for about a month and a half now. So I had to learn a lot of the basics and learn some other strategies that I don't even use anymore. But once I learned this, along with the other stuff that I know with trend lines, support and resistance and things like that, you know, you even could use some indicators, Bollinger Bands or RSI, stochastic or something if you really wanted to. But I don't really use any indicators. The only indicator I use is the CM time baselines, and all that does is it shows me midnight. It shows me, you know, midnight. So this is midnight every night. So I know, you know, on the 1 hour, usually about 3 o'clock in the morning is when the London session starts. And then about 8 o'clock in the morning, or excuse me, 7 o'clock in the morning is when the New York session starts. So it just gives me an idea when I'm coming in marking up my charts on Forex, like where my daily, you know, my times are. But you know, nonetheless, that, you know, that's just the only thing I really use. I don't really use any other indicators except for price action. I just look at how price moves and I see how price flows in the market off of order blocks. And then like this one here, it came to this order block and it ran, and it came to this order block and it ran. So if you know, you can scalp with this, you know, like okay, you got an order block here, you got an order block here. It's already respected off of it once, you know, came here, came to there. You kind of know if it comes back up to this zone, it's already tested off of once, this would be a double top. What we call a double top. Comes up once, comes up a second time, and the double top is almost always a rejection. If it's rejected once, it almost always rejects again, unless there's some news or something happens that's going to just let it blow through. More than likely, price is going to reject at least a second time off of it. So you could have, you could have come down to this order block. You could have taken a buy here or sell here, excuse me, take your profit here, take a buy, take your profit here, take a sell, take your profit here, take a buy. So and it doesn't always work that way, but you can get to where you can kind of tell where price, because this is the double top here, but this is the double bottom here. So once you saw this rejection here, this kind of lets you know that something was going on. So it dropped and dropped, and then it pushed back up. Now, actually, price, there's still some missing price here. No, I take that back. Not from this wick. I'm sorry. But this ran up and it never really came back and tested this zone. It is breaking microstructure. You're seeing that this here is higher than this one. That wick is not, but this wick breaks multiple candles. So this is starting to look like it's working back up, but there's still a high probability that it may come back down into this order block here one more time, boom, and then go, just to kind of, if there's any missing price or anything in there, it might do that, but it could just continue on up. Now, eventually at some point, it's going to get to this level that it double topped that earlier, and it's going to break and run. But, I mean, for the most part, just looking at these order blocks and seeing how the market moves, you can tell, what's going to happen. I mean, I saw this happen here and I saw this happen here. I went back and looked at some bigger order blocks from the past, which gave me this green order block that's kind of back here, told me the areas. I was able to mark them up, see where it was tested, telling it was testing back into that order block. And then when I saw that rejection here off of it, and then it came back, this is where I took my trade right here. And then from there, it just dropped. And again, it came almost back up. I mean, with the spread, I was in negative when it came back to this part, not much, but a little bit. But then as soon as it got back close to this area, what happened? Price fell again. So anyway, I hope that I'm not too long-winded on this. It's just a really interesting way to look at the market, to look at the way things move. When you look at these order blocks, you've got this order block here and, came down and tested and then ran. So anyway, this is just a really cool kind of strategy that just lets you know about price action. It gives you zones where price may bounce off of. By dropping down to lower time frames, you can refine those zones. If you've got a 1 hour order block that's 200 pips, you don't want to set a stop loss, take a trade off of that and set a huge stop loss above that order block. You can break it down to the 15-minute, to the 5-minute, until you find the small order block where it's only literally on Forex. Some of my trades are 1 to 2 pip stop loss. And with that, I can take a much higher risk. So instead of me taking a 0.1 or something risk, I can take a 0.5. And if it goes in profit, then I'm making $5 a pip as this runs down, instead of $1 a pip or 50 cents a pip or whatever that might be. So those tight stop losses give you the opportunity to take a bigger lot size, because if let's say you're taking a 0.5 and you want to risk 1% of your account, and let's say that 0.5 it will put you, you can do a stop loss up here, and that will put you at 1% on a 0.5. Okay, let's say you're able to refine that down to a 5-minute or a 1-minute, and you realize that actually your order block is here, which is, let's say, 2 pips instead of 5 pips. So you potentially could take a 1 lot or a 1.2 lot or something like that. And if you lose this trade, losing it from with the stop loss here would be the same amount of money as losing it as a stop loss here with the 0.5. So a 1.2 here would be the same amount of money as a 0.5 here, because it's less of a stop loss. So having that precise entry lets you take a bigger lot. So if I had taken a bigger lot from here and then it did all this price where it came back down, that's more money that I'm making per pip, $12 a pip instead of $5 a pip or something like that. So it lets you really break it down and look at it. And again, I think I've mentioned in another video about order blocks, this supposedly works on everything: gold, US30, crypto, Forex pairs, stocks. I mean, charts move in patterns. There's an algorithm to it. You've got these filling in missing price. And anytime you see a candle, just consecutive candles, just leave a zone, boom, gone. And there's no real wicks up and down or whatever in those. It's just candles dropping. There's a very good chance that you can find the top of that area, kind of mark it up where it's where that big drop off, and there's a good chance it's going to come back in to fill in that missing price before it continues on the structure. Now, another thing to look at, which is also really important, is you want to look at just the overall flow of the market. Okay, so you can see from this low point here, we've been running up, running up, running up. You get a little pullback, but you get a higher high, lower low, higher high, excuse me, higher high, higher low, higher high, higher low, higher high, higher low. And so it's a bullish market structure. You're seeing it going up and then back, and run up and back, and it's still making higher highs. But then what happens? It runs into this. I don't remember if this was an 8-hour order block or what, but it runs into this 8-hour order block or this 4-hour order block, whatever it was here. Once it gets to that point, that means that in the past, there was probably a lot of selling pressure there. And there may be still a lot of pending orders still sitting there from weeks ago, months ago. People may have put pending orders in there in case it came back to this zone. So the banks want to get back to this area. They want to take price back to this area to be able to take those trades. But if you know the zones that it could reverse from, then instead of, most people would be like, hey, I'm going to take a buy. I'm going to take a buy. I'm going to take a buy. And when it got to this point, it dropped. And they were like, what happened? It's a bullish structure. Why did it tank again? Well, it hit some order blocks, and those order blocks pushed it back down. Now, again, price could blow through that at some point, and then you would start looking at higher zones. Okay, what else is up here? Is there an order block in here on a 4-hour or a 1-hour? Is there an order block here? I'm sure there is on the 8-hour. You could zoom in and say, all right, this is actually a bearish, bullish, bearish order block. So you got an order block there. And then this here is another order block. So you've got one there, and then you've got another one here. So ETH has the potential of coming back. If it blows through this block, then there's a potential it can reverse here, reverse here, or reverse here, or here. But you wouldn't want to take a trade off an 8-hour order block. You would want to go into the 1 hour, the 15-minute, the 5-minute, the 1 minute, and refine those down to the smaller order blocks. So instead of having this huge order block here, go to, let's say, 15-minute. See if it'll let me go back that far. It may not, because that was like months ago. But anyway, you can go back and actually say, okay, where is it at? I believe it was this one. So here's your bearish order block here. So you can take that 8-hour order block and move it to there. And you've got a little bit of missing price in there too. So there's a very good chance at some point it's going to blow through this order block to get up to this other order block. I can get there. So it may blow through the order block here and come back into this zone. And if it blows through that one, then you can refine this order block down, and that might be your next zone that it could reverse off of. So anyway, it just gives you an idea of what the market could potentially do in the future. And then once you find that setup, once you find that setup that you like, where it's testing back into an order block, you want to see it come down and start to break some of these other microstructure candles. So it came down, it broke a few candles here. It kind of let me know that there was some bearish pressure, came back up into my order block. I took my trade, and it came up, and then it dropped. And when it dropped, it broke the rest of these and even this big wick too. And then when this next candle dropped, it broke all of these other wicks. And that's just basically telling me the market just went completely bearish. Now we're still on a main bullish market structure. Again, when you look back on the hourly, the 4-hour, we've been working up, but there is going to be some pullbacks in those areas that you can potentially take a trade off of also. It's best to trade with the trend, honestly. But occasionally you find these perfect reversal zones, and you just kind of take a chance at it. Say, hey, I saw it come up here. It broke a couple of the microstructure a little bit, tested back into my bearish order block, and then it tanked. Okay, so now you know. And then where did it come to? Another order block before it's working back up. So anyway, sorry. But it's just really cool when you start really back testing this. Like if you were just to kind of go back, like, however far you wanted to go, like on the 15-minute, and just go back in time somewhere, you could just go boom and say, okay, let's say this was real life right now. Okay. And I want to see what's happening. What am I looking for? Okay, well, you've got a higher high, and this looks like it'd be a higher low because you've got a pullback there. So now we'd be looking for an order block somewhere in here. Okay, you see prices already retested that, came up, retested it again. Technically speaking, this is an order block. And this is an order block. So you expect price to at some point run up, test back into the order block, and then start to go. Now this probably, because I just randomly picked this, it's going to go the wrong way, I bet. Figures. Anyway, but anyway, so I guess this showed a break of microstructure here. So I guess it's maybe turning into a downtrend. But anyway, you can kind of back test it, but just picking random periods of time in the past, using the replay feature, erasing all those candles and just pretend like you took a trade and just see what happens. Or you use a demo account and take real trades, live trades on a demo account, look at the market, see what's going on, and then take that demo trade and just test it over and over and over again until you feel comfortable with how the market moves. To be a good trader, you've got to spend thousands of hours on the charts. Like, you've got to see it with your eyes. Your brain has to recognize the patterns. And once they start to recognize the patterns, you can just look at the market. Because I found that ETH trade off a 15-minute order block, and I found it at the right time, like right as I looked at the market. I got lucky, I guess you could say, but my eyes saw it immediately. I was like, oh, that looks like an order block. That looks like it's retesting. Let me mark it up and see. Started marking stuff. Sure enough, that's where it was. And then I started marking up the 4 hour, the 8 hour, the daily, the weekly too. And I started saying, hey, this is testing off of this zone and it's working back. And it kind of made sense. So anyway, reach out to me if you have any questions. I know this stuff is a little complicated. I did another video, 2 more videos actually, on what order blocks look like. There's 3 different bearish and 3 different bullish. So there's a video where I just have a picture on the screen. I'm just talking about those 3 types of order blocks. You need to study those and learn those to see what to look for in the market. And then the other video I did is just about the order blocks in general and how to mark them up and how price reacts off of them. A lot similar to this one, but I wanted to break down an actual trade that I took today and show y'all exactly how the market moved in that trade and what I look for from the top down in that trade analysis. So anyway, God bless. Have a good night. Much love.